You think inflation at the pump or in the grocery store is bad now? What if I told you there are two countries on Earth right now where the currency collapsed so fast, people watch their life savings vanish, their wages become worthless, and their social fabric tear apart in real time? This is the story of Argentina and Lebanon, two very different nations, separated by thousands of miles, cultures, histories, but united in one terrifying economic reality. When money goes to zero, everything you knew changes forever. This is Macro Rewind, and if you want smart financial storytelling that makes sense of chaos, make sure to like and subscribe, because what we're about to dive into isn't just history, it's a warning. Let's start with Argentina, a country that every economist once thought was different. For decades, it was rich with farmland, resources, and industry. Yet, year after year, decades of debt, constant money printing, and political gridlock pushed it ever closer to economic collapse. By the end of 2023, inflation in Argentina wasn't high, it was astronomical. Prices were rising at more than 211% a year, the worst in more than 30 years, fueling shortages, destruction of savings, and a desperate population. Imagine walking into a shop one month, and next month, a loaf of bread costs twice as much, not because demand is higher, but because the peso is worth half as much. In some months in 2024, inflation accelerated so fast that it felt like hyperinflation was knocking at the door, and many economists and Argentines began to realize that for ordinary families, money was slipping through their fingers faster than they could earn it. What made Argentina's battle so dramatic is that it wasn't a sudden crisis. It was decades in the making. Successive governments financed spending by printing pesos. The central bank essentially monetized deficits in plain language. They created money out of thin air to pay for bills and programs. That sounds abstract, but the result was all too real. Wages couldn't keep up, savings were decimated, and people started handling their business not in pesos but in dollars on the black market. The cycle fed on itself like a fever spreading through the body. In late 2023, as inflation exploded above 200%, Argentina elected a radical new president on a platform of economic shock therapy. His name was Javier Milei, a libertarian who looked less like a typical politician and more like someone who would tell a packed auditorium, "We're going to rip the Band-Aid off." And that's exactly what he tried to do. His government slashed spending, cut subsidies that once helped everyday people afford basics, and forced the central bank to stop financing government deficits. The result? By 2025, inflation had fallen sharply down into double digits in annual terms, even into the 30% range at times, a dramatic reversal from the sky-high rates just 2 years earlier. But here's the wrinkle. The cure was painful. Cutting government support didn't suddenly make everyone better off. Prices stabilized, sure, but unemployment climbed. Real wages stayed low. And for many Argentine families, life remained a struggle. Stability meant that the economy stopped bleeding, not that it was healthy again. Now step across the globe to a different crisis. Lebanon. If Argentina's story was one of chronic inflation turning acute, Lebanon's was an astonishing freefall from stability into one of the worst financial implosions of the 21st century. To understand Lebanon's meltdown, you have to go back a few years, specifically to 2019, when the Lebanese financial system unraveled dramatically. For decades, Lebanon's economy was propped up by banking secrecy laws, high foreign deposits, and a fragile reliance on remittances and tourism. Beneath this veneer, though, was a massive buildup of public debt, so massive that by 2019, Lebanon's debt-to-GDP ratio was one of the highest in the world. When confidence finally collapsed, it didn't just wobble, it disintegrated. Banks literally froze people's savings, forbidding them from withdrawing dollars they thought they owned. The local currency, the Lebanese pound, quickly lost more than 90% of its value on the black market, even as the official rate remained artificially fixed for a time. That disconnect between official numbers and reality is one of the many reasons ordinary Lebanese couldn't trust anything, not banks, not government statistics, not future prospects. Inflation spiked into the hundreds of percent, and essential goods, food, fuel, medicine, became prohibitively expensive. In some periods, food inflation surged by thousands of percent compared to previous years, and shortages were widespread. The loss wasn't just economic. It hit people where it hurts. Families had to choose between buying bread or paying rent, waiting in lines for hours for basic supplies, and living with almost no electricity because the state couldn't afford fuel. Unlike Argentina, where reformers eventually wrestled inflation down, Lebanon's crisis has been compounded by political paralysis, corruption, and repeated leadership failures. Even in 2026, citizens have taken to the streets after new taxes were approved to pay for already deeply devalued public sector wages. Such is the desperation and fury sweeping the streets of Beirut and beyond. The Lebanese situation became so dire that by 2025, international institutions like the International Monetary Fund were warning that lasting economic growth would only come with comprehensive reforms that have been extremely difficult to implement against entrenched political interests. This brings us to the larger lesson. Hyperinflation and currency collapse aren't accidents. They're the result of years, sometimes decades of policy choices, trust deficits, external shocks, and a collapse of confidence. In both Argentina and Lebanon, promises to fix the economy came too late, and the damage traveled beyond numbers on a page. It manifests in abandoned dreams, shuttered businesses, bank accounts that are paperweights, and a generation that watches prices rise faster than their wages. So what's the takeaway for viewers in the United States, or anywhere else watching this story unfold? It's that money isn't just abstract, it's trust, and when trust breaks, the economy breaks with it. Argentina's attempt to claw back stability shows that even painful reforms can work, if done decisively and early. Lebanon's ongoing struggles show what happens when denial, corruption, and political division keep a country from facing economic reality. As we wrap up, I want to hear from you. Which crisis do you think teaches the harsher lesson? Argentina's inflation spiral or Lebanon's financial collapse? Drop a comment below with your take. Share this video with anyone trying to understand inflation, currency collapse, or how macroeconomic forces can shape real lives. This is Macro Rewind, where history isn't just remembered, it's understood. And if there's one thing these two nations teach us, it's this. When money loses meaning, everything else becomes unstable.